the mining industry is just too scared of their governments and too scared of their banks to.
Special coverage of the New Orleans Investment Conference is brought to you by Victoria Gold, leading Yukon's new gold rush.
Welcome back to the New Orleans Investment Conference, special coverage of SF Live. My name is Kai Hoffmann. I'm the @JRMining guy on Twitter and the CEO of the Soar Financial Group. And we're joined by Chris Powell. He's Secretary and Treasurer of the, and I have to read that because I stutter otherwise, Gold Antitrust Action Committee, GATA short. And thanks so much for joining us. Thanks for coming out.
Delighted to be with you, Kai.
How were the first few days? Like you gave your presentation on Wednesday already. Today is Thursday, so just yesterday. And how did it go? What are some of the themes you were talking about?
Well, I was delighted that the conference was so well attended so early. It seems like a good crowd here, despite the smashing the gold and silver sector has taken in the last year. I talked to the audience about the developments in gold price and silver price suppression over the last year, what happened that helped drive the price down. But basically, our work is mostly to identify evidence of government intervention against the monetary metals. And the government archives and even some contemporaneous reports are full of the evidence of intervention. Unfortunately, intervention in the monetary metals markets is a prohibited subject with the mainstream financial news organizations. And unfortunately, even the mining industry itself is much too scared to get into the issue.
Well, it sounds like they might be hurting themselves if they start discussing that. But I'm curious, like, what are some of the signs? And now I'm curious, because one thing I always notice is at 8:30 sharp, the gold price drops. Like, it's like a waterfall chart. It seems like every day is the same thing.
Yeah, there's some powerful institutions that are playing in the gold futures market. I think the only debate would be over who those institutions are. Fortunately, there's monthly contemporaneous evidence that those institutions are central banks. We know this because we have a consultant, Robert Lambourne, in the United Kingdom, who studies the monthly statements of account of the Bank for International Settlements in Basel, Switzerland. The Bank for International Settlements is the gold broker for central banks. It has advertised in its promotional materials to prospective central bank members that its services include secret interventions in the gold and currency markets. We have their PowerPoint promotion from, I think, 2008. One of their members, one of their meetings, it advertises interventions in the gold and currency markets. The head of the Monetary and Economic Department of the BIS a decade ago, William R. White, gave a speech at a BIS meeting in Basel, Switzerland, about the main objectives of international central bank cooperation. White said one of the main purposes of international central bank cooperation is to influence asset prices, especially, he said, gold and foreign exchange, when this influence might be thought useful. The BIS exists to be the gold broker and market intervener for central banks, to provide central banks cover, camouflage for their interventions. And you can see in the monthly statement of accounts from the BIS substantial changes in its gold position, especially for what they call gold swaps and leases. The BIS does not undertake gold swaps and leases for you or me or ordinary parties. They do it for their owners, central banks. Central banks are the owners and board members of the BIS. So if the gold position of the BIS, as reported in its monthly statement of accounts, is changing, it's because its member central banks are intervening in the gold market in various degrees. So there's overwhelming documentation of this intervention, especially in the United States, but also in the United Kingdom. We produce these documents. We store them on our internet site. I talk about them at conferences like these and try to get people interested in them, interested enough in raising questions with their governments about it. The mining industry is just too scared of their governments and too scared of their banks to...
Are they even aware? Because in the end, like mining companies sell to a trader and then the gold sort of disappears. They don't see the end buyer.
I'd be very surprised if there was any substantial gold or silver mining company today that is not fully aware of the gold price suppression issue. We have contacted many of them. They've been at conferences like this with us and heard our presentations, but we have to understand that mining is really the industry most vulnerable to government and banking interests. Any mine is vulnerable to their governments for their royalty arrangements and taxes and environmental concerns, getting their mining claims, their patents. And mining is also the most capital-intensive business in the world. It's hard to get a mine going for less than $1 billion, and it takes years to do it. That kind of money is available only through the largest banks, sometimes only through international banks, and these banks, for the most part, are very much agents of central banks and governments. I mean, all the biggest banks in the United States are intimate agents of the Federal Reserve and Treasury Department because they are primary dealers in U.S. government securities. Well, any mining company that objects to government intervention in the gold and silver markets has got to be worried that their government's going to impair them in some way, or their own bankers will stop cooperating with them.
What role do the banks play? Because JP Morgan just got like a verdict against them for spoofing, right? And that was more on the silver price side. What role do they play? Is that more of a just greedy traders, or is that more of a systemic issue?
Well, they play two roles. One, they play roles as agents for governments and central banks. And then they play their own role of trying to rig markets for their own profit. But the recent trial of the JP Morgan traders who were convicted of spoofing the gold and silver markets disclosed that Morgan, some years ago, was vaulting gold for at least 10 central banks and presumably carrying out trades for them. Well, the only reason central banks would vault gold with JP Morgan is intervention in the markets. Morgan is a bullion bank. It's an international bank. There's no need for governments to deposit gold with Morgan unless they're secretly intervening in the markets.
So let's talk about the motivation for manipulating the gold price or silver price as well. Like, what's the intention? Like, what's the goal? What's the purpose based on your research?
Well, gold is a competitive currency. It's also a competitive investment. The gold price is the inverse of the price of government currencies. Governments, especially the U.S. government, have always manipulated the gold price, or at least been very sensitive about it. Back in the 1960s, there was an operation called the London Gold Pool, which was a association of Western central banks based at the Bank of England that intervened in the gold market, selling official gold reserves at $35 an ounce to lock the gold price there. It blew up in March 1968 because they began to run out of gold. The demand for physical became too great, but governments want the gold price down because it is the inverse of the value of their own currencies. They attack the gold price, they suppress it, contain it to support their own currencies. If gold goes up, it means the government currencies are going down.
Interesting point. Like, a lot of talk here at the conference about CBDC, central bank digital currencies as well. Some are suggesting they might be gold-backed. How do you see the role of gold moving forward as a monetary metal, meaning maybe as a backup for a new currency? Do you see that happening at all?
Well, it's being talked about in regard to moves by Russia and China and the allied powers in Asia I don't bet on it's happening, but I do know that the Russians and Chinese consider gold a very powerful weapon, but I think they're looking at it more as a defensive weapon right now. No government wants its currency tied to gold. Gold is a huge restriction on government, and the Russians and Chinese certainly could use gold to knock the United States back a bit, but they don't want to be limited by the gold price either. So I'm not sure what those countries are going to do.
If you were to knock the U.S. back, meaning the U.S. dollar, like how would you do that? Like what's with gold? Like what does that look like?
Well, excuse me. Could do it very easily. They just could buy more and more, excuse me, physical gold, and sell dollars, sell treasuries. Hey, look, China has, the biggest batch of U.S. Treasury bonds in the world. If China dumped its Treasury bonds and sold them for gold.
Well, they've done that actually for the last couple of years now.
They've been, we think they've been doing it, gradually. If they did it all at once, the dollar would crash and gold would go to the moon. Does China want that? I don't think China wants that unless it needs to, make a counterattack against the United States. But any country with a substantial foreign exchange surplus could pull the plug on the gold price suppression policy of the United States simply by selling treasuries and buying physical gold.
Interesting comments. It's being debated that the LME is supposed to ban Russian metals and trading of Russian metals. Would that include gold and silver as well, and what kind of effect do you expect from that?
That's under discussion right now. I think that threatens to make the London market much less relevant because gold and silver are fungible. If you can't sell them in London, you can sell them in Dubai or Istanbul or in Hong Kong. I don't think that would make much difference to the gold price. In fact, the Russian government has announced that it is undertaking a plan for what it calls the Moscow world standard for gold. They want to develop a very sophisticated gold market in Moscow, very frankly, to bust the monopoly of the London Bullion Market Association. I think the Russians are fully aware of how the West has been controlling the gold price. We know that the Russians know about it. Back in 2004, the deputy chairman of the Bank of Russia, Oleg Mezhevskov, gave a speech in Moscow at the Kempinski Hotel to the summer meeting of the London Bullion Market Association. The only words in English he spoke were Gold Antitrust Action Committee. I think he was telling the London bullion bankers that Russia was on to their scheme of suppressing the gold price and wasn't going to cooperate with it anymore. We know China knows all about Western gold price suppression policy because of the WikiLeaks cables from a few years ago. The WikiLeaks cables included disclosure of cables from the U.S. Embassy in Beijing to the State Department in Washington that were translations of a large number of news reports and government-owned financial news publications in China that talked about Western gold price suppression policy in detail and about the necessity of China to get out of the straitjacket that the United States had put on gold. These news reports were translated in the U.S. Embassy in Beijing, cabled back to the State Department in Washington, and then disclosed by WikiLeaks with all the other cables they disclosed. So we know not only that Russia knows all about gold price suppression policy, we know China knows all about it, and not only that China knows about it, the United States knows that China knows all about it. So
interesting, very, very interesting commentary. The presentations have been recorded. I'm definitely going to watch your presentation in full. It's about 20 minutes, I think.
It's on our internet site if you want to see
okay, even better. GATA.org. You're giving away free content. I was just going to give Brian a shout out here. Well, New Orleans conference, because you can access all the replays there as well.
I'm not sure how long people want to look at me.
No, I appreciate that. But Chris, thank you so much for coming. It was a great time, first time meeting you. I hope we get to catch up again soon, and we'll be back. Or we should have you back very soon. It's
Thank you
fantastic.
very
Chris,
much,
thank you
Guy.
so much. And to everybody else, thank you so much for tuning in. SF Live, special news coverage here from the New Orleans Investment Conference. Make sure to hit the like and subscribe button if you like the content, and leave a comment. What do you think is going on in the gold market? And if you have any comments for Chris as well, put them in there. We'll reach out to him and get him answered. Thank you so much, and we'll be back with lots more soon.